The IRS is sitting on money that belongs to you right now. Not because you did anything wrong, not because of an audit, not because of a mistake on your return, but because the one form required to release that money was never filed. The average amount seniors leave unclaimed? $4,873. That is not an estimate. That number comes directly from IRS data, the gap between seniors who qualify for specific refundable credits and the number who actually file the right form to collect them. And here is the part that should make you angry. The IRS will not call you. They will not send you a letter. They will not automatically cut you a check. The system only pays out when you file a claim. If you never file, the money sits there. And after 3 years, it disappears permanently. No appeal, no extension, gone. So today, I am going to make sure that does not happen to you. My name is Eduardo. I have spent decades studying the federal tax code, specifically the rules, credits, and refund mechanisms that affect retired Americans. The provisions that are technically available to millions of seniors but practically claimed by only a fraction of them. If this is your first time here, subscribe right now. Every week I break down the tax rules, government programs, and refund opportunities that affect seniors and retirees in plain English, completely free, with nothing to sell you. Now let's get into it. Before I walk you through the specific credits and forms, I need to speak directly to two groups of people, because both of them are about to make a costly mistake. The first group is the senior who already files a tax return every year, sometimes with a professional preparer, sometimes with software. You are thinking, if there was money on the table, my preparer would have caught it. I understand that confidence, but it is frequently wrong. High-volume tax preparers process hundreds of returns during filing season. They apply standard deductions, standard credits, standard forms. The specific elections and refundable credits available to seniors, particularly those tied to the interaction between Social Security income, pension income, and the new senior-specific deduction structure that became effective in the 2025 tax year, require updated knowledge that many preparers simply do not have yet. If your preparer has not specifically trained on the One Big Beautiful Bill legislation, they may be missing these credits entirely on your return. The second group is the senior who does not file at all. Your income is mostly Social Security. You believe you are below the filing threshold. You think there is nothing to gain from filing. This belief costs this group the most money of anyone watching. Here is why. Refundable credits do not require you to owe taxes. You can owe 0 federal income tax and still receive a check from the IRS, but only if you file the correct form and claim the credit. Not filing because you think you owe nothing is the single most expensive assumption a senior can make. I am going to cover both groups on every point. Nobody watching this should finish this video thinking this does not apply to them. Let's start with the Earned Income Tax Credit, the EITC. Most people think this is a credit for working families with young children. That understanding is about 20 years out of date. Congress expanded EITC eligibility starting in 2021. They lowered the minimum age and eliminated the upper age limit entirely. That means seniors qualify. Here is the rule in plain English. If you have any earned income, part-time work, consulting, self-employment, even occasional handyman jobs or selling items online, you may qualify for the EITC regardless of your age. For 2025, the maximum credit for a senior with no qualifying children is $632. With one qualifying child, including an adult child with a disability who meets the dependency tests, it goes up to $4,213. With 2 qualifying children, $6,960. The income limits. Single filers need earned income and adjusted gross income below $18,591 with no qualifying children. With 1 child, that limit rises to $49,084. Here is the key point. Social Security does not count as earned income for EITC purposes, but it does not disqualify you either. If you receive Social Security and also earn $8,000 from part-time work, you qualify for the EITC on that earned income. One catch: if your investment income, dividends, capital gains, interest exceeds $11,600 in 2025, you are disqualified from the EITC even if you have qualifying earned income. That rule takes most comfortable retirees with a large portfolios out of this credit. If that is you, your opportunity is in the next point. Your one action right now: go to irs.gov and search EITC Assistant. Answer 5 questions. It takes less than 3 minutes and gives you a definitive yes or no based on your specific situation. If you qualify and have not claimed it in prior years, write down which years are involved. I will cover how to go back and recover that money in a moment. The second credit is one of the least claimed in the entire tax code. It is called the Credit for the Elderly or Disabled, and it lives on Schedule R of your tax return. This credit has existed since 1976. It was specifically designed for seniors on fixed incomes with limited tax liability, and almost nobody claims it. Not because few seniors qualify, but because most preparers never check Schedule R as part of their standard workflow. Here is who qualifies. You must be 65 or older by the end of the tax year, or retired on permanent and total disability with taxable disability income. The credit is calculated as 15% of an initial amount. $5,000 for single filers, $7,500 for married couples filing jointly where both spouses qualify. Reduced by your non-taxable Social Security, non-taxable pension income, and half of your adjusted gross income above certain thresholds. Now here's the part that matters most for 2025 specifically. The new senior bonus deduction from the one big beautiful bill reduces your adjusted gross income. Lower AGI means a smaller phase-out reduction. For seniors in the $20,000 to $35,000 income range, 2025 is the first year the Schedule R calculation may produce a non-zero credit after years of calculating to zero. If you use tax software, do not wait for it to bring up Schedule R automatically. Search for it manually within the software. If you use a preparer, ask them directly, did you run Schedule R with the 2025 senior bonus deduction applied to my AGI? If they look confused or give you a vague answer, that is a problem. Ask to see the Schedule R worksheet. You are paying for accuracy. You are entitled to ask. Now let's talk about going back to recover money you missed in prior years. Most seniors believe that once a return is filed and accepted, that year is closed. It is not. The IRS allows you to file an amended return using Form 1040-X for up to 3 years after the original filing deadline. An amended return lets you add credits, correct your filing status, add deductions, and claim refunds that were missed the first time. Here is why this is urgent right now. The 3-year window for amending your 2022 tax return closes with the 2025 filing deadline. April 15th, 2025, or October 15th with an extension. If you had qualifying earned income in 2022 and never claimed the EITC, that window is closing. Once it closes, that money is gone permanently. Form 1040-X is a straightforward two-page form. It shows your original figures in one column, the corrected figures in a second column, and the difference, your refund, in a third column. You attach the relevant schedules and submit it. Electronic filing is now accepted and processes in 8 to 12 weeks. Paper takes 16 to 20 weeks. You can track your amended return at irs.gov using the Where's My Amended Return tool. Your one action right now. Pull your tax returns for 2022, 2023, and 2024. Check whether Schedule EIC and Schedule R appear in each return. If either is missing and you believe you may have qualified, proceed to the free filing options I am about to cover and get those years corrected before the deadline. Here is the part that removes every remaining excuse. You do not need to pay a preparer to file an amended return or a first-time return to claim these credits. For the overwhelming majority of seniors watching this, free professional help is available right now. The IRS funds two programs specifically for this. The first is VITA, Volunteer Income Tax Assistance, available to taxpayers with income generally below $67,000. IRS-certified volunteers prepare your return completely free, including amended returns. The second is TCE, Tax Counseling for the Elderly, available to anyone 60 or older with no income limit on the base program. TCE specializes in exactly the retirement-specific questions we covered today. Social Security taxation, pension income, EITC for seniors, Schedule R. The largest TCE provider is AARP Tax Aid, which operates thousands of sites nationally and does not require AARP membership. Both programs can prepare Form 1040X amended returns at no charge. A senior who uses VITA or TCE to file an amended return claiming $4,873 in missed credits pays nothing for the preparation and receives the full $4,873. Your one action right now, go to irs.gov and search VITA Locator, or go to the AARP Tax Aid Site Locator. Enter your zip code, find the nearest site, call to confirm they handle amended returns, and schedule an appointment. Bring your original returns for the years you want to amend, your Social Security income statements, and any W-2 or 1099 forms showing earned income. One important note, these sites operate primarily January through April 15th and appointments fill fast. Do not wait. Let me bring this together with the one idea that matters more than any individual form number we covered today. The IRS refund system is entirely reactive. Money flows out only when a form comes in with a valid claim. The system does not notify you when you qualify for something you did not claim. It does not calculate what you would have received if you had filed correctly. It waits. And the 3-year window it gives you to correct a missed claim is the only second chance you get. The seniors who recover this money are not the ones with the most complicated returns. They are the ones who know which forms to check, which credits are refundable, and how to use the free tools the IRS has already made available to verify eligibility. That knowledge is the entire difference between $4,873 in your pocket and $4,873 that stays in the federal treasury because the right form was never filed. The money exists. The law says it is yours. The only thing standing between you and it is knowing which form to file and filing it before the window closes. You now know. The window is open. Do not wait. And before you close this, send this video to one senior in your life, a parent, a sibling, a neighbor, a friend. It does not matter whether they file every year with a professional or whether they have not filed in years because they thought they owed nothing. Both of those people are in this video. Both of them may be owed money they have never claimed. One share from you could put thousands of dollars back in the pocket of someone you love. I will see you in the next video.